Welcome back to the channel. Today we are conducting a professional deep dive into the second quarter 2026 financial performance of Micron Technology, Inc. We will examine the company's explosive revenue growth, balance sheet expansion, and the dominant performance of its cloud memory division. Before we break down these impressive charts, please like this video and subscribe for more institutional-grade technical financial reports. Let's get started. We begin our analysis with the current market status of Micron Technology, Inc., trading under the ticker MU on the NASDAQ stock market. As of the close on April 3, 2026, Micron stock was priced at $366.24, showing a slight daily decrease of 0.44%. Despite this minor retracement, Micron has seen a massive valuation surge over the past year, driven by the unprecedented demand for high-bandwidth memory and storage solutions in the AI era. As a global leader in semiconductor systems, Micron's pricing is a primary indicator for the health of the memory market. This current valuation reflects a market that is pricing in significant future growth as data centers and consumer devices transition to more memory-intensive architectures. This baseline pricing sets the stage for our detailed exploration into the company's profitability, balance sheet strength, and segment performance. Throughout this video, we will dissect the technical data to provide a comprehensive view of Micron's financial health in the second quarter of 2026 and what it means for institutional investors navigating the semiconductor cycle. Turning to the income statement for the second quarter of 2026, Micron reported staggering total revenue of $23.86 billion. This represents an extraordinary 74.89% increase compared to the previous quarter, signaling a powerful acceleration in the company's core business. Net income for the period was a robust $13.79 billion. The chart illustrates a clear breakout in profitability, with gross profit, operating income, and pre-tax income all trending sharply upward. This data demonstrates Micron's successful operational leverage, where increasing production volumes and premium pricing for high-end memory products are falling directly to the bottom line. For investors, the consistency in net income growth, which has risen from near break-even levels in late 2024 to the current record profit, is a testament to management's execution during this supply-constrained environment. Observing these quarterly trends helps us understand how Micron is successfully monetizing its technological leadership in DDR5 and HBM3 products to deliver a resilient and highly profitable base across its various global business cycles. The firm's ability to generate nearly $14 billion in quarterly profit underscores its dominant earning power. The balance sheet provides a clear picture of Micron's rapid financial expansion. As of the second quarter of 2026, total assets reached a significant $101.51 billion, an 18.07% increase compared to just the first quarter. Over the same period, total liabilities increased by only 6.94%, reaching $29.05 billion. This widening gap between assets and liabilities reflects a substantial increase in the company's equity base and a very healthy debt-to-equity ratio. The massive expansion of the balance sheet is primarily driven by increased inventory values and significant investments in new fabrication capacity to meet future demand. Micron maintains a conservative risk profile, with total liabilities representing less than 30% of total assets, which is critical for maintaining stability in the cyclical semiconductor industry. For long-term investors, the focus remains on how efficiently Micron is deploying this $100 billion asset base to generate superior returns on invested capital while maintaining the necessary liquidity to fund the next generation of memory technology. This balance sheet strength is the foundation upon which Micron builds its market-leading manufacturing capabilities and ensures operational continuity through future market shifts. Cash flow analysis is essential for understanding the liquidity dynamics of a capital-intensive tech leader. In Q2 2026, Micron generated free cash flow of $5.52 billion, a significant improvement over the $1.67 billion generated in the full year 2025. This surge in free cash flow highlights the company's transition into a highly cash-generative phase of the cycle. The chart shows operating cash flow reaching $17.52 billion for the prior year, providing the underlying liquidity to fund massive investments in equipment and property. While investing activities have seen consistent outflows, they are being increasingly covered by the robust cash from operations. This positive trend underscores Micron's exceptional ability to generate actual cash from its manufacturing operations, providing the necessary liquidity to fund its quarterly dividend and reinvest in its technological infrastructure without relying heavily on external debt. For investors, this consistent cash generation is a hallmark of Micron's financial strength and a key reason for its high valuation multiples. The availability of over $5 billion in quarterly free cash flow provides management with significant flexibility for future capital allocation, whether through increased dividends, share buybacks, or strategic R&D expansions. Key efficiency ratios offer further context into Micron's operational performance and its valuation relative to its historical semiconductor peers. The price-to-sales ratio is currently 7.23, and the enterprise value to EBITDA ratio stands at 11.05. These figures suggest a valuation that is well supported by the company's current earnings power and the scarcity of its high-end memory products. With a global workforce of 53,000 employees as of 2025, Micron is maintaining a very high level of revenue per employee, showcasing its manufacturing efficiency and the high value of its intellectual property. These metrics are vital tools for comparing Micron against its global competitors in the memory sector. The stability of these ratios through recent quarters, even during the rapid stock price appreciation, suggests that the market's expectations are being consistently met by the company's fundamental financial performance. For an analyst, these numbers represent a company that is perfectly positioned to capitalize on the secular growth in AI compute, provided it can maintain its technological lead and continue its trajectory of efficient capacity management across its global fabrication network. These ratios confirm Micron's status as an industry leader. For income-focused investors, Micron's dividend policy provides a steady, though modest, component of total return. The company recently paid a quarterly dividend of 15 cents per share, resulting in a trailing 12-month dividend yield of 0.13%. The chart shows that while the yield is low, due to the stock's rapid price appreciation, the absolute dividend amount has remained consistent. Investors should note the next payment date of April 15, 2026. The sustainability of this dividend is exceptionally high, given the record-breaking free cash flow we analyzed in the previous segments. With a payout ratio that remains very low relative to earnings, Micron has ample room to raise its dividend significantly in the future if management chooses to shift more capital toward direct shareholder returns. For most Micron investors, the primary focus remains on the substantial capital appreciation driven by earnings growth, but the commitment to a regular dividend serves as an important signal of management's confidence in the long-term stability of the company's cash generation capabilities through the semiconductor cycle. This combination of growth and regular cash returns makes Micron a unique holding in the tech sector. Reviewing the latest financial highlights, Micron reported an earnings per share of $12.20 for the last quarter, which destroyed analyst estimates of $9.19 by a massive 32.81%. Total revenue for the same period reached $23.86 billion. Looking ahead to the next quarter, analysts are projecting a further increase in earnings to $19.21 per share, with expected revenue rising to a record $33.80 billion. The significant beat in the most recent quarter is a powerful signal of the immense pricing power Micron currently holds in the high-end server memory market. While the forward-looking guidance is historically high, Micron's recent track record of consistent and widening beats, ranging from 19% to over 32%, provides a very bullish backdrop for investors. Monitoring these reporting cycles is essential for understanding how the market's high expectations are being consistently exceeded by Micron's actual bottom-line performance. These numbers demonstrate that Micron is currently operating at the peak of its efficiency and market dominance, driven by the systemic shift toward AI-centric hardware. The revenue trend analysis for Micron over the past several quarters reveals a remarkable pattern of accelerating growth and positive surprises. Starting from $6.81 billion in early 2024, quarterly revenue has surged to nearly $24 billion in the latest reported period. Even more telling is the company's ability to consistently beat analyst estimates, with surprises growing from 2% in mid-2024 to the recent 19.50% surprise. This trend indicates that the market has consistently underestimated the speed and scale of the memory recovery and the impact of Micron's premium HBM3 products. The projections through 2027 show a continued expectation of record revenue, with quarterly targets expected to hit as high as $44 billion by the end of next year. For any investor, this pattern of exponential revenue growth, combined with frequent technical beats, is a strong indicator of a company with high operational leverage and a dominant market position. These trends provide a solid foundation for future stock performance, even as the global technological landscape continues to evolve. The acceleration in both revenue and surprise percentages highlights a company that is fundamentally outpacing market models. Finally, we analyze Micron's revenue by business segment and geography. Last year, the company generated $37.38 billion in total revenue, the majority of which came from its top-performing cloud memory business unit. That segment alone contributed $13.52 billion, highlighting the massive role of data center infrastructure in Micron's growth story. The chart also shows meaningful contributions from the mobile and client business units, as well as the emerging automotive segment. Geographically, the United States remains the dominant market, accounting for $24.11 billion in revenue, nearly doubling from $13.17 billion in the prior year. This diversified segment mix provides Micron with multiple levers for growth, allowing the company to weather fluctuations in consumer devices while capitalizing on the massive AI build-out. The expansion in the cloud memory segment is particularly critical because it provides high-margin recurring revenue that can support the firm's long-term R&D and capacity expansion plans. Understanding this segment and regional breakdown is key to assessing Micron's overall value and its ability to continue leading the global memory industry across both high-performance and consumer platforms. That concludes our professional financial report on Micron Technology for the second quarter of 2026. From the $100 billion balance sheet to the massive 32% EPS beat, the data reveals a company operating at the absolute forefront of the semiconductor industry. If you found this technical analysis helpful, please hit the like button and share your thoughts on the future of memory technology in the comments below. Don't forget to subscribe for more institutional-grade financial insights. Thanks for watching, and we'll see you in the next analysis.